Week 35 is here and you are listening to your favorite podcast, Trading Tips with Jim. And if you haven't liked it yet, like it, follow and subscribe. Last week was yet another good week for Nasdaq, up 1.4% for Nasdaq, ending the week at 17,878 points, just above the resistance, meaning now it's again a free run up till 18,500 points. Will it make it? Will it break it? What will the week be ahead of us? I will try as usual to give my best guess. Dow Jones up almost 3% for Dow Jones, up 1.27 to be exact, ending the week at 41,175 points. So we are again getting up to the all-time high. Does that mean that we can push it? Because if we look at the chart, we can see that Nasdaq is currently overbought. We have been pushing far. Now the last part of resistance comes at 18,500 plus. Is there enough momentum to push through and put us back on a rising trend again for Nasdaq, which several weeks ago broke the rising trend, went into horizontal trend, and for the last 2 weeks been moving up. It was especially the prior week, which was very good, when Nasdaq moved 5.3% in just a single week. Well, something has to happen. There has to be a momentum. Usually we try to see that in the volume, but the volume is not particularly high, meaning that there is no special things going on in the market. It's not flowing more investors into the market. There is just the same major stocks being pushed up, while the big 7 stocks, while most of the stocks actually either fell or moved sideways during the week. But our $1,000 trading tips, Fate did it, pushing up 13.49% over the week from my buying price. But I will get back to that in the $1,000 challenge by the end of the podcast. So we are heading for a new week. There was a huge sell signal in Nasdaq. Now it's flipped to buy signals from the moving averages, because the price is now above the short and the long-term moving average. But not by significance. In technical terms, you want at least a 3% gain to be short. Depends a little bit on the time difference which you watch, but it's like a common rule that you want a break. If it's from a signal indicator or anything, usually up around 3%. You will not get that if you use a very, very short-term moving average, because you have a lot of swings, but for longer-term moving averages, that's the kind of break you need to say that, well, we have a changed situation. Otherwise, you can just get into a situation where you have a false indicator. Now, what are the things that can push the market forward? I just told you the Nasdaq is now overbought again. And we do know when Nasdaq is overbought, it can keep doing that, did that for months and months. So it's nothing wrong about that. At the same time, we do know that getting this high, usually there is a chance of correction. We need a few more things to hit in before we can tell it's ready to fall hard. First off, it needs to be even a little bit more overbought, and it needs to really push against the resistance. And if these things are not present, there is a fair chance that we will see an upturn. So this week, I will actually give you what I really think will happen. My best guess for the week, trying to be as accurate even day by day, how I think Nasdaq will move. There is a momentum, which means that I think Nasdaq has a fair chance of moving up today, maybe also tomorrow. Could be parts of Wednesday, but not all of Wednesday, and I will explain why. But for the first few days, I see a fair chance that there still is momentum and hope from last week. Then we will hit that huge resistance again, and we have to look, so what can break the resistance? Push the stock market higher than that? Well, on Wednesday there will be Nvidia results, and Nvidia has all the power in the world to make market move up or down, especially if we talk about US markets. Of course, all eyes will be looking at Nvidia, and you shouldn't be too much occupied about the numbers, but more what the boss will tell about the company state as it moves forward. Because the numbers, they are already in, it's nothing you can do about that, but what will happen forward? I love IT, I love tech, follow AI somewhat closely, and what has happened in the AI industry over the last few months is harder and harder competitions pushing the price. For instance, if you use ChatGPT, maybe you notice that the price that you usually used to pay before for an API call is dropping and dropping and dropping, and this is just how competition works, meaning that unless they manage to gather more upscale, scaling really fast upwards, there will be a toll on the profit margins. And this is what I think Nvidia will say that there is. Nvidia is not in the AI space as such, they are selling the processors, of course, but given the fact that now there is a huge competition in the end part of AI, the actual like ChatGPT, Claude, all of these, Meta, etc. I think that these companies are somewhat fully invested, and most of these companies said the same thing. We will go into a cost-saving program, firing off people. Just look what IBM said, and I think that they will also start to reduce the huge ramp up into AI, meaning especially the server configurations, the infrastructure. I think many of them have the infrastructure in place. I think there will be less room for exponential growth in Nvidia, and the stock price is actually based on a huge growth in Nvidia. We will see. My guess is that the numbers will be very good, but I believe the boss will say that he sees some hard time moving forward, and based on this and what happened with the major tech stocks over the last few results, last few weeks, is that they publish their numbers, which is very good, then they start to fall. I think that will happen with Nvidia on Wednesday, pulling the market down, and I think that will make for a red end on Wednesday, Thursday and Friday, and in total bring the market further down from current level. So I guess there will be, my best guess is that there will be an upturn, maybe today, tomorrow, pushing the market maybe even as high as 18,500, then it will start to fall, and I strongly believe that by the end of the week the market will be less or lower than today. But I've been wrong before, we know that. So cross the fingers, the market will just continue upwards, but I see these kind of clouds, especially with Middle East tension escalating. Now it is Lebanon, Israel, which is really hot, and that has the potential to bring in Iran and a lot of other things. So there you go, 8 minutes into the podcast. I believe market will go down by the end of the week. We'll see if I'm correct or not. Personally, you may also, how do you use this yourself? Well, I told you that I am not fully invested into the market. I do not want to sit in all this volatility. And I don't see, there are selected stock, of course, but in general, I invested into gold, as you know. Gold is hitting almost $2,600, $2,549 currently for gold. Was flirting just under $2,600. I think will just continue upwards to $3,500. And since I bought at $1,600, of course, I'm very happy about gold. So I invested into different other things. I increased my portion in crypto a little bit, into gold, and lending, for instance. I increased different places, which I think, in case it happens, which I believe, that market will take a huge fall. Nobody can say exactly when. Will it be in 1 week? Will it be in 1 year? But I believe markets again are ready for a stronger type of correction. And if that happens, I do not want to sit fully exposed into the market. I want to be ready to go in and buy cheap. I done this with the electrical vehicle lately because they have been really hammered. So I have slowly started to position myself with what I have in the stock market into EV, and will continue to do so because I think these have been hammered too much, meaning that there is a potential upside even if stock markets go down. Of course, if it goes very fast down, everything will be pulled down. But in general, I think it's a good opportunity. Risk management, it's called. And I have told you over and over again that gold, oil, war is where you want to be. Oil price at 76, actually $75.5 right now, down $0.50 since last week. Oil companies are still making extremely good money. Energy is still hot, and I believe it will just be continue to be hot. So freight, bulkers, I'm personally into bulkers as well. Norwegian and US bulkers, a few selected oil stocks there. I think these will just keep steady float. Most important, they will pay high dividends. So that is my current strategy. I do not expect too much movement if I get correct, but I've been waiting for this some time. We will have Middle East conflict at least for a short period increase quite drastically, pushing oil price to extreme levels. That's been my bet. For those following me know that I've been betting on this for a long time. I bought into oil stocks when they were very high. I started to reduce, but I keep some of them, and most of these are in freights because they make so good money right now and pay good dividends. So it's more a sort of a dividend strategy for my oil stocks right now. War stocks, they just keep doing the same thing. They cannot produce enough weapons, have huge profit margins, and just leave a nice trail of high dividends with the potential of an upside and a good chance to be quite stable if market starts to struggle. So if it happens out of the blue, I'm hoping that I'm in a portfolio which can handle the stress if and when it will occur. Few more things before going to the $1,000 challenge. Here they are, the stock signals for this week. Across all the tickers that we analyze, some 40,000 tickers now, 35% is giving buy signals. Is way too high, sorry to say, but that's the case it is. Nasdaq went up from 16 to 22% this week, not so bad at all. And the reason why Nasdaq went up is because of these big companies going up. Pulling the index has to do with index weighting. While, as I said, most of them are not going up. So there is only 22% buy signal. So there are selected stocks at Nasdaq which I really like. Fate was one of them, which I mentioned I would buy in the $1,000 challenge. New York Stock Exchange 55%. That is absolutely where we had it last time a minor crash was. 55, 57. Get up to these levels is just doomed to happen. I really hope that I'm wrong, but when we are up at this level, and if we look at the latest tool which I developed for New York Stock Exchange, I will post a picture of the YouTube video. You can see it's flashing sell signals absolutely everywhere for New York Stock Exchange. We will see if that will be the case, but I cannot understand how newly listed stocks will do good when we get to the end of the week. We will see. But 35% for all the tickers, 55% for New York Stock Exchange tells me we are at the upper level. 33% for London, not too high, but still getting high. 37% for Frankfurt, 21% for Tokyo, which was up from 40 last week. Only 10% in China. We know China been in and out, but personally I like actually Asia right now much more than other thing. And looking at India, National Stock Exchange of India, 43% buy signals. There was a period where we were in the same levels. Markets managed to go, I believe it was 3 weeks with these high numbers, even increasing them a little bit. It was exceptional good weeks because market was euphoric, and then came the huge fall. Will it be the same? I do not know. What I'm saying is this will not remain. Guarantee you that for sure. No, so this is it. As I said, Nasdaq getting into overbought, but still has some little room up to the next resistance at 18,500. Then it's all time around 18,600, somewhere there. If it pushes through, well, I've been so long in the stock trading game that I have seen these things happen. Things get into overbought, markets just get euphoric because now we are waiting for the guaranteed drop in the Fed interest rates. But anyone who follow the market do also know that last week they had to revise the job numbers. They were bluffing by 820 or 880,000 jobs in US. Wasn't just a bluff, they didn't exist, they had to revise it. They have been doing this all the time. And I said to you that jobless numbers would increase, but it was such a slow increase. Well, some of the reason is because they've been bluffing with the numbers. It was the second biggest revision in all history of revised numbers. And you can imagine with today's digital world how easy it's to have access to numbers control. Still, they had to revise it down, and they do it somewhat quietly. So things are really happening in the economy. We see this in consumer behavior. Spoken a lot about this. And job numbers are increasing. Thursday will be job number again. We'll get jobless claims expected to be 232,000. I think it will come in the upper end, and I think that the next thing that will scare this investors, because now it's we will have the decrease in interest rates. Usually when interest rates are low, people cannot get much of the savings in the bank, so they go to the stock market instead. I think that we will see the opposite here, that we had the initial push last on Friday from Paul Speaks, but now they will use a few days to rethink. The professionals, they are already rearranging their portfolios. They are getting out of the Magnificent Seven stocks, reducing their portfolios. It is mainly the common investor that try to buy what they call buy on the dip, while the big investors, they are slowly reducing their exposure because they do not expect the same growth moving forward. What else to mention? Tomorrow will be Nordstrom quarter results. Nvidia will be aftermarket on Wednesday. Will be a very, very special day Wednesday. And then you have Salesforce and Foot Locker, which I run myself. Bought Foot Locker very, very cheap. They were hammered because they had these consumer issues. And selling less, all this rampage to their stores, etc., which was a huge problem and still is in certain parts of US. I think that we will see a better number. Foot Locker took some deprecations, did some changes, and I think that Foot Locker will push somewhat good numbers. Hopefully, we will just see. But I have some Foot Locker stocks myself. Thursday will be the job numbers, then there will be Dell and Best Buy quarter results, while Friday will tell us about the personal spending numbers and personal consumer expenditure numbers, meaning we will get information how the consumer, you, are spending your money. Shouldn't come as a surprise, just check your own behavior. How are you behaving yourself? Have you started to cut different things? Have you started to save? Have you started to cut your subscriptions? Are you rethinking your investments? If you do it, well, that will be the main case across the board. And so far, it is Friday. We will know much more. 10-year Treasury yield at 3.8, slightly down from last week at down 1.84%. So why is it still 3.8%? That is because some professional investors, me included, believe that inflation will not go away. Now they have emptied some of the stockpilings from the COVID times where everything was stockpiled, too much orders in, profit margins are really being squeezed. I think it's just a time of matter before we start to see inflation go up again. Yes, the consumer will be spending less and less, but there has been so much changes in general in the market and how we behave that I think it will hit a lot of shops been closing, and it takes time before all of these things come into fruition, starts to work. And I just believe that we will see, yes, there might be a dip, two more dips in inflation. but it will not reach the 2% target. So inflation, they want the inflations to be under 2%. I don't think it will happen. I think things will start to backfire. We'll have increase in jobless numbers. It's already been going up enough to call recession for the economy, and I think this will you will just see that it will go very, very fast to 5%, 6%, 7%. We will hit stagflation in my guess, because on top of this we have all the tariff wars and all the issues going on around. I'm not sure that goods will float as easy as they have, and if they don't flow as easy as they have, there will be a constraint, there will be less of them. Add some tariffs on top of this and you have a situation where the goods are not getting cheaper. Who will be right? You have to follow the podcast, and if you haven't done so, like and subscribe and see, because I will tell you what will happen moving forward. 20 minutes, time to get into the $1,000 challenge last week. And by the way, what do I mean by $1,000? Well, a year ago, I changed my portfolio, which was doing so good over years, which I let you follow. I changed into a challenge where I started with $1,000 to see how fast I could grow it. And it's been growing slower than what I wanted, but we were almost up at $4,000. Then I bought NEO. NEO was supposed to do good, but market had some other opinions about that, pushing a little bit down, then pushing NEO down. I had to take a loss in NEO, putting the portfolio down to 3,084. We were up at 3,900 something. Then one mistake, but we've been growing quite nice, pushing us almost down to the 3,000 mark, 3,042 if I remember correct. So I told you last week, and I do this every time I tell you before I buy, so you can see what I actually buy. I tell you what I buy. And last week I told you I will try to buy Fate Therapeutics, FATE, as cheap as I can. I got into and posted on YouTube the same thing. I got into Fate at 341. I think it was some half hour after starting. It was a little bit lower, maybe 330ish plus. And then it started to push upwards, was even up above 4 during the week, ending at 387. So far up 13.49% in the portfolio, bringing the $1,000 challenge to 3,452. We see how bad 12% downwards when you are at 4,000. Well, it takes time to get back to the levels. For the week ahead of us, I think that Fate will start very good off in the beginning of the week, but I will be ready to cut Fate if I see what I think might happen, that the market will be a bit shaky. I still think there is quite good upside in Fate, but it will be hard if markets get too red. So I'll keep a little bit wide stop loss for the first few days, then I will see what I will do. I was hoping to do up around $5 for Fate, maybe even more. Long term, I like what I see, but this stock can easily go back to 320 before going up again. But if you're a long-term investor, what I think will happen in Fate is that if we look quite much forward, I think Fate will be at quite much nicer place than it is today. I believe there is some real nice upside. It's a good time in general, but the timing we might see. So I will keep Fate. I believe that maybe today is Monday, that we will see it tick past 4, and as we move forward, I think that Wednesday will be, we will see, maybe it will be cut on Wednesday. I will post it on YouTube when it's out of my portfolio. We'll not get too greedy this time. We will have to try to get back to 4,000 so we can continue to grow the portfolio. That was it. 24 minutes. Usually the podcast is 30 minutes long, but why would we make it so much longer? I had a beautiful weekend, by the way, doing metal detecting all weekend. I've been walking close to 25 kilometers with detecting. Did I find something? Yes, I found quite much nice stuff, including 4 rings in total. None of them of any real value, but for me, very nice. 1 was broken, 2 were missing the stone, the fourth had the stone. I might put up a picture, and they were squeezed in all directions. Tons of coins, of course, as usual, and 2 of them were silver coins, and a few other things, some buttons, etc. I will try to clean up the rings a little bit. Maybe I will show it in next week's podcast. The point of telling you these things is I wish for you to also have something outside stock trading, because stock trading can really mess up your mind. One day green, one day red, then it can be 3 weeks where you're losing money. It takes really a long time to get in there, to be profitable week after week or year after year. It takes some time. Most people, they actually lose money. Try to avoid gearing. I've been saying this over and over and over again. Do not spend money you cannot stand to lose. Much better if you have to have that adrenaline, if you have to have that potential huge upside. Do not use gearing. You can still start with very little money into the stock market. $10 you can get into positions, geared positions, where you can only lose your $10. That can happen in 1 minute, 2 minutes, because you will have a lot of underlying stocks. And if the stock moves 1%, so your position will move, depending where you are, it can even move as much as 100%. So it depends exactly what type of instrument you're in, but there is plenty of options. But do not use gearing where you stand to lose much more than money than you have. While $10 is not so much, or $100 is not so much, it's not nice to lose it, because then you do not have anything to invest. But if you are to invest $100 into the stock market, do not expect it to move too fast, because you have to go into extreme high risk stocks for that to happen. There are still instruments, and this will be the final word of today's podcast. If you go into instruments, do yourself the favor, go to Stock Invest, check the charts, see how much support you have below if you are on a buy one, because you can have buy options or sell options. If you are in a buy situation, make sure to know how much support you have under current levels, so you don't get hit by a day swing. You will see that as gray bars, accumulated volume, marking support levels. You will have support from moving averages, you will have support from pivot points, and a few other things. Do it for yourself. Until next time, just have a beautiful week, and we will speak. And as usual, I hope by the end of the week your portfolio will be far greener than in the beginning of the week. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information, you agree and are held liable for your own investment decisions.